To tariff or not to tariff, that is the question financial markets are hoping will be answered as the Trump administration pushes its on-again, off-again trade tariff strategy. In the past few days, the White House has gone back and forth on whether several countries would be facing steep tariffs starting August 1st. So how should investors view this uncertainty? One of our favorite guests is here with his take, as well as some interesting trades he's watching. Phil Davis is the founder of philstockworld.com. Phil, it is always a pleasure. Thanks so much for joining us today.
Oh, hi, Kim. Thanks for having me. Appreciate it.
So let's start with just your take. What the heck's going on with the markets right now?
Well, the markets are kind of a roller coaster. I mean, tariff on, tariff off, as you said in the beginning. We don't even know what's in Trump's big, beautiful bill, and they just signed it. It's like we have to sit there and go through it with a fine-tooth comb to figure out what's being funded and what's not being funded, but it looks pretty bad. It looks like $5 trillion increase in debt, $5 trillion worth of cuts to services. It's bad. And then, of course, you've got the multiple of the market has gotten out of control also, and that's something to worry about. Basically, volatility is up. The stakes are high. Investors need to be very, very careful right now.
All right. Well, let's talk about some of maybe the risks and the opportunities and the volatility side of things. What do you see are the big risks that we should watch out for? You mentioned the big, beautiful bill in terms of cost and services, but what else? What else should we be careful of?
Well, you have the rolling tariffs. It's like they're on, they're off. They're this week, they're next week. We're on our path to hitting a $50 trillion national debt by 2034, which, it sounds like a long way away, but you forget it's 2025 now. It's 9 years from now. 50 trillion in debt is 50% more than we have now. That's insane. Tech valuations are stretched. Well, I mean, not tech, the whole S&P is trading at 22 times forward earnings. So in other words, the earnings that they hope to make next year but might not are 22 times the market cap, and that's crazy. Because if they miss it, we're going to be at unprecedented levels, and the normal levels are 15, 16, not 22. So things are extremely stretched, and the RSI is very high for the market, relative strength indicator. Everything is showing that we could be it won't take much to push us off a cliff, basically.
Can I ask you in that how you're characterizing the market? Are there still opportunities in here that are interesting to you? We'll talk about trades later on, but just at a high level.
Oh, sure. There's individual companies. I mean, look at our portfolio. I mean, there's individual companies that are going to do well. We have to pick things and be careful, but we're playing more defensively now than we did last year and the year before. We're watching like maybe XLU for utilities, staples plays like XLP. That's kind of where we're looking right now. We like gold. Copper is now hot. We in fact just were looking at a copper play because Trump ran up a 50% tariff on copper. But it's so unpredictable. You don't know what to go with.
You've got the big banks. I know you noted that reporting on July 15th, and we'll get into the AI piece, but I'm expecting to see a lot more AI productivity conversations coming from the banks as well.
Oh, yeah. Well, AI productivity from the banks. I mean, they're probably on the leading edge of utilizing AI to make improvements. We ourselves being a financial are also, utilizing AI for a lot of stuff. So I see that there are improvements to be made, but not at the level that they ideally would want, not where they can start firing, laying off, whatever the polite word is, not where they can start trimming their staff at the trader levels and have the AIs make decisions. It's just, they're not there yet. They don't have the experience doing it, for one thing.
I want to ask you, but one other thing in the market is the Elon Musk wild card. Is this material, or is this just good for headlines, in your opinion?
No, it's material, but look, Elon Musk starting a third party, that's what's material. Okay, we don't care about Tesla and whatever. It's just a car company. It always has been a car company. What matters is the political party he wants to start. Is only going to steal votes from the Republicans. So the Republicans are in great danger of losing power as soon as next year's election, where Trump won't have his majority in the House and the Senate anymore because Elon Musk steals a bunch of votes from the GOP. and that would be a disaster for them. And as you know, a lot of stuff right now is predicated on the expectation that Trump is kicking out Powell and bringing in somebody who's going to lower rates for him. If that premise starts falling apart, that there's not going to be time to do that because Trump's going to be worried about the election taking his power away, then everything's a wild card next year, including what the Fed does.
So how do you, if you're watching you talk right now, Phil, someone's wondering, so how do I navigate all this? You mentioned, earnings from banks, utilities, staples, gold for stability, but is there anything else you just think people need to do right now?
I think you need to hedge. You can't put all your eggs in one basket. You should diversify. This is stuff people say all the time, right? It's just like buy low, sell high.
Yeah.
It's like, yeah, no kidding. But you've got to watch the trigger points. You got to watch the bank earnings on the 15th and see what they say. You've got to be aware of these deadlines with the tariffs, like what is going to happen on July 19th. So far, on July 9th, sorry. And so far, everything has kicked the can down the road. I don't even know if I don't know if it's even possible for them to put these tariffs on. There's a lot of bluster about it, but they're trying to sign trade deals. The tariffs haven't even been held up in court yet. So you got to pay attention to the data, not just the headlines. You really got to dig into this stuff and be diversified and have a good amount of cash. Those are my top items for navigating the market.